Stocks versus cryptocurrency. Are they the same, and what are the differences? That's what we're going to discuss in this video, so let's get right into it. Welcome, and thanks so much for joining me. If you're new here, or if you haven't done so yet, make sure to hit the subscribe button right down below the video, as I'm back each and every day to help you out in any way that I can through these videos. Thank you, I truly appreciate it. Let's get into it and discuss the differences between cryptocurrency and stocks. Now, really quickly, I also need to preface this video by saying this is not financial advice, this is not investing advice, and this is not advice in any way, shape, or form, but rather you need to figure out what is best for your financial situation and, of course, your investing strategy. I want to lay out the differences between stocks versus cryptocurrencies and kind of give you a better understanding of these two and how they are definitely very different asset classes. So again, let's just get into it and talk about the basics between these two asset classes and what are some of the major differences between them, which actually sets them apart. All right, so with that being said, let's talk about stocks first. So I would have to say that most people probably have a pretty basic understanding of what stocks are, right? We've all heard about the stock market. We've all heard about the Dow Jones and the S&P 500, maybe the NASDAQ and things like this. We've all heard about these. So most people do have a basic understanding of the indices, right? The stock market, but for the most part, that's about what most people understand about stocks, right? It's a very small fractional ownership of a corporation, whatever that you're buying stock in, that's essentially what stocks are. So you basically go out and you think, hey, I want to do some investing. I want to get a return on my money. How can I do that? Well, most people turn to the stock market and say, I'm going to buy stock in blank company that I have some beliefs in. This company, I love their products. I love their services. I'm going to go out and buy 10 shares of this company, whatever that happens to be. It could be your favorite company. It could be a one that maybe your friends and family have talked about, maybe a neighbor, or maybe somebody has given you this hot stock tip. You hear about these all the time, right? And you think, hey, I'm going to go out and buy 10 shares of this. I'm going to sit on it for 5 years, 10 years, maybe a month. It doesn't really matter the time horizon, but essentially I'm going to invest, $500, $1,000. I'm going to buy a few shares, which is ultimately going to be fractional ownership in that corporation. And then hopefully I can sell it in a month, a year, 5 years, 10 years, and double my money or triple my money, quadruple my money, whatever the return may be. But what are stocks? Now, like we said, stocks are fractional ownership of that actual corporation. So here's what companies do. So basically, huge corporations, they go out and they say, hey, we need to raise capital. We need to raise cash. How can we do that? And they look at their stock holdings and they say, hey, we have 1 billion shares here that we're holding. What can we do to raise some cash? Well, we could peel off 100 million shares of our 1 billion shares. And by the way, it is totally different for every company. I'm just throwing out some random numbers to give you a better understanding. But basically, these large corporations look at it and say, hey, we could peel off 100 million shares of our stock. We could take them to the open market and we could sell them in exchange for cash. So they take their 100 million shares of stock, and again, that number could be 100 million, it could be 1 billion, it could be 500 million, it could be anywhere in between. It doesn't really matter. It's going to vary for every corporation. But essentially, they take those stock shares and they take them to the open market, and they sell them on the open market. A lot of times they have an underwriter come in, which is typically a big bank or institution, which typically buys those shares at a discount, and then the underwriter actually goes out to the free market and actually sells them on the stock market. But essentially, it's all the same exact thing. They're taking the shares out to the open market, they're selling them in exchange for cash, therefore the cash goes back to the corporation where they have all that cash, and they can use it on whatever they want. But meanwhile, they have sold a portion of their ownership, right? So they peel off a fraction of their ownership of the corporation. They sell it to people like you and me in fractional shares or like shares, and then we buy them and give them our cash in exchange for that ownership, right? So pretty basic level stuff right here, right? So we kind of all understand that it is very small fractional ownership of that corporation. Okay, so fine. We own the shares. And then as they appreciate in value, or maybe in some instances, if it is a corporation that pays a dividend on a quarterly basis, that corporation will continue to pay us a small portion of a dividend on a quarterly basis just for owning those shares. It's kind of like a little kickback. The corporation says, hey, thank you so much for believing in us. Thank you for investing in our corporation. We appreciate it. As a result, we're going to pay you a 3% dividend over the course of a year, divided out on a quarterly basis. So that's, again, a dividend. All right, so now what is the differences between stock and cryptocurrency? Okay, so cryptocurrency is very, very different, even though it does seem a little bit similar when it comes to stocks, right? So when it comes to crypto, basically you look at the cryptocurrency market and you look across thousands of different coins or tokens, things like this, and you say, hey, this one looks good, right? It's basically all that it comes really down to when it comes to crypto. Of course, you can look into all of these different coins and tokens, read all about them, read the white paper, you can read the history, the price action, you can read all about it. But essentially, you're looking at this crypto and saying, hey, I believe in this one. It's been around for a long time now. I love what they're doing. I love the project. I love whatever else they're conducting. I like how they're going to be transacting payments with this crypto. And you could say, well, I believe in this coin. It's trading at, I don't know, $5 a coin. I'm just throwing out random numbers. It could be trading at $45,000 like Bitcoin. It could be trading at $3,000 like Ethereum. It could be trading at $160 like Litecoin, or it could be trading at fractions of a penny like some coins out there. But my point is, you take a certain amount of money and you buy this coin or this token, whatever it is. But there is a vast difference between crypto and stocks. Now remember with stocks, when you buy that actual share of stock, you're exchanging your cash in exchange for a fractional ownership of that company, right? However, what happens when you buy crypto? Yes, you're still buying something. You're buying a digital item, right? So you're buying a digital coin, a digital token. But what are you getting in exchange for that? Well, that's pretty much it. You're pretty much getting a digital coin or digital token. That's pretty much it. You're not getting ownership in a corporation. You're pretty much not getting ownership in anything other than the digital asset that it is that you're buying. So, in the event of a total collapse or a bankruptcy or something like this, like in the event of a stock, you may get paid out a fraction of whatever that, like the liquidation of that corporation. You may get, as a stockholder, you may actually get a little fraction of that back, provided you didn't sell it, provided you just continue holding onto the stock, you may actually get something back out of it. However, when it comes to crypto, if there's a failure of the coin or the token, what do you get? Well, pretty much nothing, right? So there's really nothing backing up crypto for the most part. It's basically you just invest some money into it with the anticipation that at some point in the future, it's going to appreciate in value and you can sell it for maybe double your money, triple your money, quadruple, maybe 10 times or 100 times your money at some point. But for the most part with crypto, there's not a whole lot backing it up other than just the faith that it's going to appreciate and it's going to continue to be there at some point. Versus a stock, you actually have this corporation that you actually have a fractional ownership in, if that kind of makes sense, right? Now again, there are some ways that you can get some kind of returns on your crypto as you actually hold it, like staking. But again, we could talk about that in a separate video. That is a whole separate topic into itself right there. But here are some of the advantages of crypto versus stocks. Now again, I don't know your situation, so this is not advice in any way or shape or form, but I'm just letting you know. When it comes to cryptocurrency investing, if you happen to invest in crypto, it is incredibly volatile. So you could buy a crypto coin today, and you could literally double your money overnight. Now I realize that sounds like there's no way it could go up 100% overnight. Yeah, it actually can. In fact, it happens all the time. You probably hear about this. Cryptocurrency that surges 100% overnight, cryptocurrency that surges 500% in a week, something like this. Crazy moves when it comes to crypto. But another thing too, you could buy it today and it could be gone tomorrow. Yeah, we've also heard about that too, right? You've seen all these coins or tokens that come out. They sound great. Everybody jumps in and then you wake up the next morning and, hello, what happened to my crypto? It's gone, right? Yeah, so that happens too. So here's the differences. With stock, it is a little bit more of a secure investment. Now again, nothing is necessarily 100% secure, right? So you invest in stock and you feel probably a little bit more secured with that investment because it's actually backed by a corporation, right? It's actually traded on an exchange like maybe the NYSE, the NASDAQ, something like this. But when it comes to crypto, there's all these unregulated exchanges out there, things like this. But the trade-off could be you might invest in a stock and look for maybe a 7% return on an annualized basis, whereas with crypto, you may be looking for some high flyer where you invest today and you're looking to get out in a week with double your money, something like that. So stocks are probably far less volatile in most instances. Now, don't get me wrong. There are some stocks out there that are very, very volatile and that can move quite a bit, like pharmaceuticals, things like those. Those move very fast and they have a very high beta. But again, we can talk about beta in a separate video. Essentially, they move multiple times the S&P. But otherwise, when it comes to crypto, it's basically just a huge speculation play. Whereas in stocks, you're actually investing in something looking for an annualized return over a course, a set period of time. Whereas crypto investing, it's basically like, hey, this is a huge speculation play. I'm going to dump a little bit of money in here, and I'm going to really cross my fingers that this thing takes off, and I'm going to get to double my money in a short period of time, and I'm going to get out because, it's not really backed by anything at the same time, right? So on a really basic level, you can kind of see the differences here between the two. Of course, there is a trade-off. Stocks move much slower, but it's actually backed by something substantial, whereas crypto moves very fast. It's very volatile. You could double your money or you could lose all your money very quickly, but at the same time, it's not really backed by really anything for the most part, right? Now, again, that's a whole argument. I mean, we could talk about it, and a lot of people would say, oh, it's backed by, blockchain technology. Well, yeah, but at the end of the day, if the coin defaults or the coin fails, what do you have backing you up? Nothing, right? For the most part, absolutely nothing. You're just basically, that's it. It's done. Game over. Just like a video game. You play. It's fun. And then when it's game over, sorry, you've lost all your tokens. You know what I mean? So anyway, this is kind of like the basic rudimentary kind of like basics behind stocks and crypto investing. Now, again, we could go into way more detail talking about all this stuff, but I kind of wanted to lay out the differences between stocks and crypto and just let you know, like, they are very different, even though they do appear on the surface level kind of relatively the same, right? You're buying something, you're getting to hold it, and then you can sell it at some point. And one cool thing about stocks and crypto also is they're both very highly liquid. In other words, you can get into a stock position today and get out in like 3 minutes. You could get into a crypto position today, right now, and you could liquidate that position in literally fractions of a second. You could liquidate it in a minute or two, and there is liquidity there. So there is somebody on the other side of that trade. So, another cool thing about trading both of these asset classes. But anyway, I wanted to lay out just the basics between these two, stocks versus crypto. And again, we could always come back and talk about this in far more detail in future videos. But either way, kind of hope this lays it out some of the differences between these two, and just kind of gives you just a real basic understanding of stocks versus crypto. Anyway, hope this helps you out. Again, subscribe right down below the video. I appreciate it. I'll be back every single day to help you out in any way that I can through these videos. I love talking about topics like this and just kind of sharing some of these, some of these differences, some of my knowledge, my expertise, things like this, and my experiences, of course, with all of you and this. But again, this is not trading or investment advice. It is not financial advice in any way at all. I would highly recommend, if you're looking into investing in stocks and or crypto, do research. Seriously, learn as much as you possibly can, because ultimately, knowledge is potential power, right? So anyway, thanks again. I appreciate it. Enjoy your day, and I'll catch you again later.